Hey everybody, this is Ryan Mallory and welcome to my YouTube channel where I teach you how to swing trade the stock market using technical analysis from my 30 years of trading experience. We're going to talk about the stock market bubble that we're currently in and whether this big blow up in Afghanistan could actually cause a ripple effect in the stock market and the trades that we hold. But first, make sure to like this video and to subscribe down below so that you can always get all of the notifications from all of my videos that I post from here on out. For a quick market recap, the S&P 500, it was down 0.6% on the week. You had the Nasdaq 100 down 0.3%, but the Nasdaq Composite was down 0.7%. Then you had the Russell 2000 that led all of the indices lower, down 2.5%. But what was most interesting was the fact that the Nasdaq Composite doubled the losses of the Nasdaq 100. What does that tell you? That means that the big tech was keeping the market afloat, and that without those big tech stocks, specifically the FANG stocks, then you would have had a much weaker market this week that would probably been more in line and in tune with the kind of losses that we saw on the Russell 2000. Now, will the Afghanistan crisis lead to further selling in the market in the days and weeks ahead? By itself, it's not likely. Here's the thing. The market doesn't care about what's going on in Afghanistan. What it does care about is if it leads to a fundamental shift in the power structure of the United States. And when I say that, what I'm talking about is if this thing really turns into a Watergate where it leads like a presidential resignation and you have a new commander-in-chief, then yes, that would affect the markets quite a bit. But we're not even talking about that at this point. The markets are simply reacting to what's going on in Afghanistan, and it's not really focused on it all that much. The other issue could be is if this emboldens China to be more aggressive towards Taiwan and actually tries to seize control of Taiwan going forward. Then you would also have a ripple effect in the market. But Afghanistan by itself is not going to create a big brouhaha for the markets going forward. And oftentimes what we care about as people, the market doesn't care about. And we kind of find that weird. But the market only cares about how does it affect stocks? How does it affect companies? How does it affect future earnings growth? If it doesn't affect those things, the market's not going to care. Now, let's take a look at the S&P 500. I've been talking about this resistance level almost in every one of my stock market bubble updates going back to April. It has been a consistent nuisance for the market and for traders and wanting to see some big price expansion once we hit those new all-time highs. Instead, it hits this resistance level and ultimately it leads to sell-offs. And we got that again this past week on Monday. We tested that resistance level, and the following 2 days we saw some significant selling. Now the dip buyers jumped in and they were able to stabilize the market. But what was interesting, it didn't stabilize right at the 50-day moving average. Instead, it settled a little bit above it and then moved higher. But if you go back to the futures market overnight, the market actually started bouncing in the futures market right off of that 50-day moving average. So in an indirect way, that 50-day moving average did come in play. It just came in play during the futures market. Now, one of the more exciting things was the fact that we saw some volume this week. 3 to 5 days, the S&P 500 was up this past week. And in all 5 days, the market had above average volume. We haven't seen that much lately. And one thing you want to remember, even if you're bearish on the market, you want to remind yourself that the dip buyers are going to keep dipping. They're going to keep buying. They're going to keep trying to boost this market back up to all-time highs. You have a number of companies that are still engaged in their stock buybacks that they have to complete before the end of this year. That's going to provide some buying power to this market, especially with the FANG stocks. And those FANG stocks are what's continuing to boost the strength of this market. It's what's stabilizing the market because you got companies like Microsoft, that's 2.2 trillion. You got Apple, it's worth over 2.4 trillion. You have Google, they're a $2 trillion company. You have these huge market caps that when the investors are seeking safety, they're seeking it oftentimes in these FANG stocks, and they're so big that they stabilize the rest of the market. So until you really start seeing those break down, and the only one to do that is Amazon, which has yet to get a real bounce post earnings. In fact, it's kind of surprising to me. There was a nice hammer candle that formed this past week that looked like, okay, this stock might be ready to bounce finally, but it didn't. Instead, it just continued to drop lower. I actually had a trade set up ready to take advantage of it, but it never triggered my entry price, so I didn't take it. That's one of the key parts of trading. I don't force entries on stocks that I might want to get into, but if it doesn't hit my entry, I'm not going to force the situation. Now check out the Qs. You have the Nasdaq 100 here with heavy resistance that goes all the way back to September of last year. It's tested it multiple times, resulting in sell-offs. We got a little bit of a sell-off, very similar to what we saw in the S&P 500. Now, you also have a bearish wedge, and that comes in the form of a broken trend line off of the May lows from this year. That trend line broke. Now, one thing you want to remember about the S&P 500, the Nasdaq, and the Russell 2000, that 8 out of the last 15 years following options expiration, the market's been down. just slightly more than 50%, so that's something that you're going to want to keep an eye on as we close out this month. Now, the Russell 2000 is probably most reflective of the overall market. Why is that? Because it doesn't have the heavy influence of the FANG stocks. It doesn't have any of them, in fact. And instead, what you have is a market that has been sideways since late January, not doing anything. And that's what's made the stock market so incredibly difficult for so many traders, because the stock market itself is being boosted by just a handful of stocks. But in the grand reality of it all, it's not really doing anything. It's just trading sideways. And that's most obvious with the Russell 2000, which is the weakest of all the indices. In fact, there's all sorts of technical problems popping up on the Russell 2000. You have a rising trend line going all the way back to the COVID lows of last year. That one just got broken this past week. Then you have a sideways channel that we've been trading in since late January. That one broke to the downside. Then you have a nice little bearish wedge, bear flag-like pattern that has formed over the past month. That one broke to the downside. You also have a new declining trend line starting to form off of those June highs. So there's a lot of problems there. In fact, we were even trading below the 200-day moving average for the first time since September of last year. And while we quickly regained it on Friday, it shows you nonetheless that there is a troublesome pattern developing on this index. I'd be remiss if I didn't show you once again the problems on the T2107, where it shows you that only 47% of stocks are trading above their 200-day moving average. That's with the S&P 500 and the Nasdaq trading less than 1% off of its all-time highs. T2108 continues to decline off of the December highs, and it's much more bearish as it has only 1/3 of all of its stocks trading above their 40-day moving average. Once again, S&P 500 and Nasdaq 100 both 1% below its all-time highs. So there's a huge divergence right here, and it's yet to get settled. Right now, with as many all-time highs as we've been forming this year, this should be at 80 or 90%, and it's not. It's at 1/3. 33%. Make sure to click join below and sign up for my YouTube membership channel. You're going to get all sorts of market research for you each and every day. You're going to get multiple updates. That's going to include watch lists, trade setups, daily setups that I'm following each and every day, FANG stock updates. You're going to get the S&P 500, the Nasdaq, and the Russell 2000 updated for you each week as well. Lots of information. Make sure to check that out. Support this channel and get some of the best market research that you'll find anywhere. So going forward, what do? Do we buy the dip here? Do we say, okay, Thursday and Friday, the S&P 500 and the Nasdaq looks like it's put a bottom in and we're ready to march right back up to all-time highs? Very, very possible. I still expect the Russell to be one of the lagging indices as it has been for much of this year. It just really hasn't had that big momentous breakdown yet, but it's getting very close. But if you're going to buy the dip, make sure to do it carefully. You don't want to be jumping all in. You don't want to be 100% long right now. What I would want to be doing right now is trying to say, okay, is there an opportunity to the long side? Can I buy this stock and maybe that stock and see if there's any momentum to be gained from this market going back up to those all-time highs? If not, then you only lose on a little bit. But if you're right, then you can start adding even more new trades because you have the momentum on your side. But being careful is huge right now. The market's being careful. You're seeing the utilities really lead the way higher right now, particularly from stocks like NextEra Energy, stock symbol NEE. Those are the stocks that a lot of investors are piling onto on top of all the FANG stocks. So be careful because there's a lot of caution being shown in this market right now, and you don't want to be more aggressive than you should be. If you enjoyed this video, I'd encourage you to like and subscribe, and make sure to click on that join button down below for my YouTube membership channel. Let me know down in the comments, what is your plan for the next week ahead? Are you going to be buying the dip here? Are you thinking that the worst is behind us and that the stock buybacks that are scheduled to happen for the rest of this year going to keep boosting this market higher? Goldman Sachs thinks there's another 5 to 7% left in this market. Let's see what we can get from it in the week ahead. Thank you guys, and God bless.